All right, welcome back to another episode of the Black Bullion Show. Yesterday we spoke about how the dollar is being a bit of a thorn in the side of gold and silver right now. And, there are definitely signs of life, definitely today, signs of life right now with gold and silver, as we're currently seeing them gain over the dollars after the 10 o'clock hour. But truth be told, so did equities as well. But equities aside, the dollar seems to be one of the main obstacles for gold and silver. For gold to hit 2,000 now, and for silver to hit $26 now. I mean, we were just trying to get past $25 and we got past it, and now it looks like $26 is in our sight. So what exactly is going on right now? Well, find out shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so let's get a layout of the land. Let's set a firm foundation right now and see where we are. So gold prices edge higher, but march to $2,000 hamstrung by rising dollar. Now, again, this is what I mentioned yesterday, but take a look at what they mentioned in regards to the DXY and the US 10-year yield in conjunction, because they may play a key role in how gold and silver perform. So check out this quick quote that I'll read here. Analysts at Bank of America Global Research forecast that bullion will surge by 50% over the next 18 months to around $3,000 an ounce, and see other precious metals benefiting in the Ronies environment. When you're looking at the DXY 10-year real yields levels, we would need to see gold at $2,500 per ounce. It is combinations like the DXY at 90 and real rates at -2, said Michael Whitmer, metal strategist, in comments included in an August 3rd research note, citing a July 30th call with clients featuring Whitmer and commodity research analyst Francisco Blanch. That will take gold to $2,500. Now, the DXY at 85 and real rates at -1.75 will also take you to 2,500. DXY at 80 and real rates at -1.5 also take it to 2,500 an ounce, Whitmer said, referencing bond yields and the ticker symbol for the ICE US dollar index, a gauge of the dollar against a half dozen major currencies. The DXY stood at roughly 93.615 on Tuesday. Right now, it's a little bit lower than that, up 0.3%, providing some headwind for precious metals that are priced in the currency. Assets pegged to US dollars tend to weaken in price when the dollar strengthens, because it makes those commodities more expensive for overseas buyers. Meanwhile, the 10-year Treasury note yield at 0.514% was holding around 0.54%. So now, isn't that fascinating? I mean, essentially without them saying it, here in this quote that I read, a stronger dollar is a bit of a bother to precious metals. However, with the US 10-year yield constantly edging lower, we're continuing to see weak real yields. And now remember, those weak real yields are a boon to gold and silver. Now check this out. Here we have the dollar, and basically it edged up earlier today, and it hit roughly around 93.7 or so. I think it even got a little bit higher than that, and now it's just retreated from where it was. Actually, now that it's loaded up here, let's see exactly how high it got. It got up to 93.8. And now it's edging back down. And you'll see the gold price and silver price soon, but this is matching an inverse relationship with how gold and silver are performing right now. Let's take a look at some of the dollar's competitors as well within the DXY. So let's look at its more heavily weighted competitor to its least heavily weighted competitor. So we'll start with the euro. And the euro, against the dollar today was struggling, but now it's recovering a bit against the dollar. The yen was struggling, but now it's doing even better today than it was prior. So the yen is doing pretty good. And remember, the yen is a safe haven currency. The pound sterling is recovering from where it was. Canadian dollar is shooting up, and one of the reasons why I can assume is because of the rising price, or I shouldn't say the rising price, but like the general recovery of the oil prices today. That's helping out the loonie. We also have the Swedish krona. It's doing okay, and not as great as some of its compatriots here. And also the Swiss franc is doing all right. Not too shabby here. But guys, let's take a look at where our shiny metal friends are right now. Wow. This is insane. We have $1,995 gold right now. Basically, we've gone up $22.45 today in gold, a 1.14% increase. With silver, an even better performance. We got up $1.16 today, which was a 4.8% increase today. Just take a look at where these guys are just shooting. They're just shooting to the moon right now. And one of the reasons why this is happening, and we alluded to this before, is because of the I shouldn't say poor performance, the downtrend of the US 10-year Treasury yield by its investors piling into the safe haven. Now, earlier, we saw the US 10-year get as low as 0.514. Right now, it's a little bit up, but it's not doing too well right now. I'm sorry. It is doing really well right now. Sometimes when you're looking at these things, when you're looking at a graph like this, it just tricks your mind. But it is doing really well with a lot of people pouring into it, and the yield is heading down because of that. Now, let's take a look at equities. Now, here is the Dow. Now, remember I mentioned that the Dow is also performing pretty well and equities are performing pretty well. So this is the Dow right here. Let's take a look at some of the other major indices. Let's take a look at the S&P. S&P is basically trying to nudge past that 3,300 level. The NASDAQ starting to trend down a little bit, but still it's not doing too terribly, all things considered. But I'm gonna be honest with you guys here. I would be concerned right now in equities. There's just no reason why we should be seeing the safe havens getting so much attention. The safe havens like gold, like the US 10-year, like the Japanese yen, getting the magnitude of attention that they are getting right now, while we are also seeing guys like the S&P 500, performing so well. Remember, the S&P 500 is almost closing in on its high of 3,386.15. That was its closing high back in February. Now, remember, and if you just take a look here, we keep hitting this 3,302 level, 3,302.81, 3,302.71. We keep hitting that level. But what's really interesting is that we've talked about keeping an eye on the S&P as it approaches its record highs. Now, remember, some analysts have said that when it gets there, we may see a reversal in equities. Even a mainstream guy like Jim Cramer mentioned that on his show. So, guys, that was your Tuesday. It seems that gold and silver cannot be stopped right now, even while that craziness is happening with equities. Now, by the time this video comes out, I don't know if we'll have $2,000 gold or $26 silver, but things are looking extremely fantastic right now. But let me know what you guys think about what's happening today. Stick around. We have another episode coming up in an hour and another episode coming up 2 hours from now. So we got 3 episodes a day. So guys, thanks again for watching. Please hit that like button to get this economic evangelism, I should say, out there. And also, please stick around and subscribe to catch those videos coming out today. All right. Thanks again. It's Black Bullion.